Good morning, late morning, but good morning to you, Michael. How's it going?
Just great, Laura. How are you today?
I am doing just perfectly, just fine. All is well, and I'm thinking spring is here, so it's a little cool in the morning, but that's good.
Yeah, it seems like it is typical springtime. We had a little hot heat wave last week, but a little windy today, but more spring light. And I can tell that it's spring, Laura, because my allergies are just driving me nuts right now.
I have been on allergy medicine for a week, and this is the first year in many years that I've had to take allergy medicine, but it was just too much.
Indeed.
It was like
Indeed.
a sinus headache all day, just a mild one, but all day. Well, so I was like, nah, little tiny allergy pill and poof, all is well.
Well, tell us who you are, Laura.
Laura Fournier, Nations Lending, your intentional confidant, taking you
Mhm.
through the whole process, beginning, middle, end, and afterwards, that's when the really good stuff starts. So, helping you become a homeowner or up upscaling, going sideways, downsizing, all of those good things.
And
And
and we're to
yourself?
help. We're here to help all you viewers not go sideways on any loans
I
and
just meant like sideways on in a
yeah,
lateral move.
yeah, I know.
I couldn't grasp the word lateral right up front, so I said sideways. You're right. We don't want to go sideways
Yeah.
for
And
the
and
most
everybody,
part.
I'm Michael Kurtianik, Macintosh Realtors, and I'm really excited about the topic. I want to pick Laura's brain today in this video for all you viewers about something that comes up more often than people think when it comes to applying for a loan. And then once I jump in with looking at houses and we go under contract prior to settlement. And I think that, Laura, I want to pick your brain about some do's and don'ts about the mortgage process. And I think I want to start kind of chronologically today, Laura, for our viewers.
Okay,
Like
good
before we
deal.
start looking at properties, I want to ask you, what are some things that you can advise buyers as to what to do when they're planning on applying for a mortgage?
Well, the one thing that you want to do is dig up all of your financial paperwork. You need to have your financial paperwork together. That's your W-2s for the last 2 years. If you have any sort of self-employment, 1099 income, you have a little side hustle that you declare, or you have rental properties, you're going to need your full tax return, just the federal side, but you need all of it with all of the schedules. So sometimes it's 10 pages, but I've seen them 80, 100 pages, like,
Yeah.
because one page references another. So no matter how many pages it is, we need the whole kit and caboodle.
And would you say, Laura, that a place to start for buyers is their most recent tax return? You know how accountants give us all these folders with what we gave them, right? And then they give it back to us. And maybe it's not tax season later in the year, but would you say that that's kind of a good place to start with finding and digging up all the paperwork?
Yeah, absolutely. You want to dig up that whole package because many times your accountant will attach your 1099s and your W-2s right to, I think it's page 2 where you sign of your tax return. So you should be able to find most everything right in that little nice little folder that the accountant gave you. And if your accountant doesn't make it all neat and tidy and put it in a folder for you, then I have some referrals for you.
Yeah, exactly. And I think that's great advice, Laura, because some people might be overwhelmed by the um, laundry list. And I mean that in a nice way of the list that a lender asks you, the buyer, for. And if you just go to your tax returns and give maybe like your latest pay stubs, at least you'll know what you're looking for, and
And
just
a
kind of
little I was gonna
checklist.
say a little funny story. You said laundry list.
Yeah,
Back in the day when we used to meet people face to face, and I still love to do that. So if people want to meet face to face, that's fantastic. We literally had a customer come into the office with a laundry basket with just all of their paperwork,
sure, sure. And then they dig it out and
like
then
the
they,
little, the white
yeah,
basket
yeah,
with
yeah,
the
yeah,
holes and
yeah,
stuff in
yeah,
it.
yeah.
So
That's
you
funny.
you conjured up that memory for me. It was
Oh,
very early in my career and I'll never forget it. So yes, sometimes we get laundry baskets full of people's
yeah,
paperwork. So it's
that's
funny.
funny.
So then you want
What,
to get your paycheck stubs. So for
yep,
every job that you have, I need a whole month's worth, 30 days consecutive. So you get paid weekly, it's usually four. You get paid every other week, or twice a month. Every other week and twice a month are actually two different things because every other week would be every second Friday or Thursday, is what I see mostly. But twice a month is the 15th and the 30th, or
mhm,
whatever 2 days they pick.
right,
So
right,
it's a different number of cycles for the year for our calculation. And that's why we like to see some consecutive paycheck stubs so we can see what the cycle is. And also we look very closely at, are your hours at work the same? Because if somebody is working 30 hours one week and 24 the next and 42 another week, that is variable income, and that is a whole different income calculation than if you are salary and your pay is exactly the same from week to week.
right, right. That's very important. And that's where you as a lender can guide them. I feel the question often. I want to pick your brain about this one. Um, when I talk to buyers and I tell them about the mortgage process, just complete a form and turn it in, I get feedback sometimes, Laura, where they say, oh, they're going to it's going to hit my credit and report, and it's going to, my score is going to go down because Laura's going to be pulling my credit and doing all of that stuff. Can you kind of walk us through what that really means, and is that really a hardship for buyers?
Well, up front, initially, when they go on my web application and they fill in all of their information, we actually only do a soft pull of credit. So initially, I can do just a soft pull and not a hard pull, even though within the application, we get permission to do a hard pull. But if I see that there's a lot of work to be done on the credit, and before we can really push them through the loan process, then I just work off of that soft pull. So they don't have to worry about that. Before we were just doing hard pulls, but now they've changed that, which I think is a really nice thing. So
Right,
initially, just to see the client and see where they are and to start working with them, we can do that soft pull, which is not an inquiry on your credit report. So nothing to worry about. And if somebody's credit is good, a mortgage company pulling your credit report is not going to harm you. A mortgage is the very tippy top, it's the pinnacle of credit that you can receive.
mhm,
So it's actually a good thing. And for the most part, people aren't, even if they do a little shopping around, they're not going to have 10, 12, 15 people pulling their credit. It's not like when you go to the car dealership and the finance department gets your social and they send it out to 15, 20 banks and you get 20 pulls. Yeah, that's going to
right,
harm your credit. But in
right.
general, that does not happen on the mortgage side.
All right, good. Well, I hope that our viewers can be reassured by the idea and the concept of a soft pull. So let me ask you this then. Let's say they've turned in their laundry basket full of documents that you require, and you did a soft pull, and then we have a pre-approval, and then now we start looking at houses. Is there any advice you can give buyers of what not to do once they get pre-approved and once we start looking at houses.
Yes, definitely. The first thing not to do is you don't want to change your job.
Ah, right, right,
Don't want to change your job. We have your numbers based off of where you're currently working and based on what type of employment that you have, you know. So if you change that, we have to start over again at the starting line. Now, sometimes, and I have had people change jobs, but the thing to do is call me. I mean,
right.
you can text me, but we really need to talk because I need
Yeah,
to know a lot of particulars and ask you a lot of questions to make sure we're not going to make a mess that's going to kill your loan. So we have to have a conversation. It's not good enough to have a text conversation or an email conversation. We need a voice to voice, thorough conversation about where you're going, how you're going to get paid, all sorts of things. So you don't want to be changing your job. And the second big thing that people do, they're all excited about their house and they're moving in mentally, which is all that part is fantastic. Keep that up. But you don't want to go furniture shopping.
right,
I can't tell
right.
you how many people have called me up. I'm at the furniture store.
Yeah,
Drop everything and run to the nearest exit and leave. Get
yes,
out of there. Don't, you can do that fun stuff after you move in. But even if they say, well, there's no payments for the next 18 months, in the underwriter's mind, and that's the person that signs off on your loan, there's a payment. And they have
right.
to include it in your calculations, and that could void the whole transaction.
Yeah,
So,
and I know some people who would do the furniture shopping, Laura, or buy the pickup truck, right? And what they do is, yes, they are sucked into the no payments for 12, 18 months, but they open up a new line of credit and there's immediately, debt that's accrued to it. And it sets back the buying power of somebody who wants to buy a house, and it could even implode the purchase, and we might not get to settlement because of a big purchase like that between the application and the purchase of the house at settlement.
yeah, so that's, and you hit on a good point. You don't want to be opening any new credit.
No.
And not only do you not want to not be opening any new credit, but you don't want to be closing the current credit that you have, even if it has a zero balance, because that
Right.
can change your credit score. And we get notifications.
Yes.
So, and when we get a notification, we may be doing an update. And at the very end, they are doing another look.
Yes.
So to see if there's any new, because Fannie Mae, Freddie Mac, FHA, VA, their hot button since the 2008 crash is undisclosed debt. So if something goes on there, or they even sense that there's something going on, they are going to be looking into that thoroughly, because
Right.
we have a fiduciary responsibility to make sure that the person can actually afford the property that they're buying. And kind
Yeah.
of a sister or cousin to using your credit cards or opening up new credit is those, what are they? What's it called? Afterpay is one of them, but it's like you go online and say you're buying a $200 pair of Nikes and they ask you if you want to pay for it in 4 installments.
Okay. So what about
That
that? Does
is,
that hurt your credit or hurt your?
it's not necessarily going to hurt your credit, but the underwriter is going to see all anything that is like an afterpay or a regular,
Okay.
looks like a regular payment to something through Venmo or Cash App or Afterpay or any of those. There's some other ones that are called something else. They are going to ask about those. And if it's too frequent and continuous, they could count that as a debt.
Okay.
So
Okay. I want to get back to something you said earlier. I want to look at the other side of a coin of something. Um, Job changes can be detrimental. But what if the job changes within the company, but it's a promotion and they get maybe a bonus and or a salary increase? How does that affect the loan application process as we're looking at houses?
Um, well, the bonus, we may or may not be able to count it. It depends on if you have gotten a bonus for a couple years, like a regular bonus. It can't be
Okay.
just the first bonus and us included in your income. But if
Okay.
you've gotten a bonus for a couple years in a row and you get a new bonus, they're going to average those. So
Okay.
that would be more income. More income's always good. If you got a promotion, that's fantastic. You
Yeah.
get a raise, fantastic. And in fact, if we get a written verification of employment, it asks them on there when your next raise is going to be. So
Right.
a lot of times, if you're just like pre-qualified and then like it's mid-April, you're getting a bonus and we verify it and we see that on your first paycheck in May, we can use that and increase what you qualify for. So
Great.
definitely those are something we do want you to take,
Yeah.
and we want you to tell us about it because maybe we can, use that extra income to help you in a better price range for you. Or maybe if your debt to income ratio was a little bit high, it would decrease your debt to income ratio. And Fannie
Right.
Mae and Freddie Mac just in the last couple weeks added some risk-based premiums, so cost to the buyer
Mhm.
for debt to income ratios. So it's another pricing adjustment. So maybe
Okay.
we would give you better pricing because your debt to income ratio went down because you got more income, a
Excellent.
bonus or something. So yeah, that's a
Excellent.
great question.
So, and then I have one final question to pick your brain about this. Is there any other advice you can give our viewers as to maybe something that they should do or should not do? Maybe one more piece of advice you could give for our viewers.
You definitely want to keep any receipts for maybe you had some accounts that you paid off that
Mhm.
like a collection or a charge off and you paid it off. You want to keep those really basically for forever. So you want to keep them in a safe place. All of your financial paperwork, should really do some good due diligence and, filing to keep that organized and accessible, even when you're not exactly in the mortgage process or you don't think you are. You just want to have all of that handy so that if you decide, oh, it's time for us to buy or time for us to move, you know where that paperwork is. Just
Yeah.
very, very important to make handling your finances, a regular kind of course of action that you take and you keep it filed nicely. You come up with your own system or whatever works for you. And with the don'ts, you mentioned not buying a new automobile. That happened to me. My customer pulled up and I was like, please tell me that's not your new truck.
Yeah, yeah, right.
Because guess what? Your mattress does not fit. I mean, it
Right.
does have a nice bed in the back, but
Yeah.
not comfortable sleeping. So you don't
Right.
want to do that. And another thing that buyers do, because we have a lot of great buyers, they're want to make extra money, so they have some side hustle. Maybe my brother, like he's a mechanic, so he's always buying used cars and fixing them
Yeah.
up and reselling them. Well, when you sell something and you put a chunk of cash, we can't trace that cash. So cash in the mortgage industry, that doesn't go together. So if
Right.
you have been stuffing, hundreds in your mattress, so to speak, and you have two, three, $10,000 saved, you can't just throw that in the bank and we use it towards the transaction. We got to
Right.
be able to trace the origins of where you got that money. So if you're selling something like a used car or your grandmother's jewelry that you don't like, gold that you don't wear, we need to document that. So that's another conversation that we have. Or if you have this situation and you know you're going to buy a house later in the year, start putting that money in the bank now so that we can use it. So
That's Well, that's great. Certainly provided us with a lot of information. Thanks for letting me pick your brain as to the do's and don'ts for applying for a loan and then before we start looking at houses. So Laura, thank you so much. Wonderful, wonderful topic,
absolutely.
and
And
always great talking with you.
I have a nice white page for people because there's some other things on there that we didn't get time to talk about. So, and I didn't have it on my screen today. So just text, you know, do or do's and don'ts, or just do or don't. It doesn't matter how you do it, to 301-674-7716. And I'll send you the whole sheet. I think it's a back and front or 2 pages. So be
Yes,
happy.
and also if you message us, we'll be happy to provide that for you, and be sure to like, subscribe, and share, everybody.
Absolutely. Thank you so much. Great talking to you, Mike.
Thanks, Laura. Talk to you soon.
Bye-bye.
Bye-bye.